Hey Jason, thanks so much for joining me today.
Great to be back with you.
Yeah, so there's so much to talk about when it comes to global trade. The news cycle feels nonstop. But you have this New York Times opinion piece out talking about how Trump has no idea how the trade deficit works. And we just got a pretty big news item the other day that the US and China have agreed to temporarily cut tariffs over the next 90 days, with China tariffs dropping to 30% from the US and Chinese tariffs on US goods lowering to 10%. So, what was your reaction when you saw this trade deal flash across your screen? Were you surprised? Were you excited?
I was surprised. He certainly cut the tariffs more on China than I expected, more than he himself telegraphed on Friday, and that was good news. But it also made me more baffled as to why we went down this path in the first place. If we were going to raise tariffs all the way up and then get rid of all of them in exchange for nothing but the promise of more meetings, when we could have had those more meetings without bothering with any of this in the first place.
Yeah, the negotiate to negotiate idea, right? That they have
Yeah,
floated.
look, I mean, it's better to have a madman with flashes of sanity than to have someone who's, mad all the time. And, what we've discovered is Trump actually does ultimately care about the markets. There is some constraint and some floor on what he'll do. But, that's better than the alternative, but that's certainly very far from the ideal way to conduct economic policy.
Yeah. And, you sort of hinted at it too, but a lot of people have said that China has won this round of the trade war. Would you agree with that? You said that you felt like Trump gave up more than you expected. How did you expect it to play out? And do you think China was ultimately the winner here?
Look, trade is a positive sum thing that both sides gain from. And to the degree that we had a month of basically like an embargo, highly interrupted trade, both sides lose. And, it's not like this is something you can easily turn on and off. I mean, there's ships that didn't get loaded, there's stuff that will take a while to restart. There's still a lot of uncertainty in the situation. But yeah, both our economies lost. Insofar as we were trying to accomplish an objective, then we probably lost a bit more than China did by showing that even the madman theory of negotiation, where you sort of pretend to be crazy so you get lots of things in exchange for it, that theory of negotiation isn't really going to work for us anymore.
Yeah. And how might this move affect the stated goal of fixing the trade deficit?
Well, interestingly, the biggest news on the trade deficit this week came not out of Geneva, but out of Washington, where the House of Representatives started to move forward with a very, very large tax cut. If everything in it was made permanent, it would cost over $5 trillion. They also moved forward with spending cuts to Medicaid, which don't come close to paying for that tax cut. And so, what that legislation would do is drive up the deficit and the debt. That would force us to borrow more from the rest of the world to pay for our deficit and debt. And the only way that could happen is if our trade deficit ends up going up. So this week's news was largely about how the United States is going to pass tax cuts to raise our own trade deficit, precisely the opposite of the stated goal here.
Yeah, so could you explain that a little bit more? The budget and the trade deficit being twins. Could you just talk through exactly how that works and how it is playing out in real time right now?
Yeah, so this is one of the few things in economics that pretty much all economists agree on. It's something that both Treasury Secretary Scott Bessent and Orrin Cass have also said that they agree on, and I'm not sure what else the three of us would agree on in the trade arena. So the basic economic idea, you probably would be even better at explaining this than I am, Kyla, but I'll take a shot at it, is that when you import something from abroad, which on net the United States does more of than it exports, we basically pay them $1 for whatever it is we're buying, a car, perfume, electronics. They then take that dollar and reinvest it in the US economy. So all the money that goes out in the form of a trade deficit, all of that comes back in in terms of what's called a financial account surplus. When the budget deficit goes up, that means the United States needs to borrow more. Some of that borrowing comes from the rest of the world, so that financial account surplus goes up. More money is coming into the United States. Well, how can countries get more money to put into the United States? The only way they can is if more money goes out in the form of a larger trade deficit. And so whenever national savings goes down, whenever national borrowing goes up because of a budget deficit, it has to be on the other side. The trade deficit is going up, unless businesses are cutting back on their investment. So the only way out of this is a pretty unpleasant way out.
Hmm. And do you feel like we're headed toward that unpleasant way just because of the magnitude? I think it's like $4 trillion expansion in the budget deficit because of these tax cuts. Like, do you feel like we're just headed towards this more nasty way?
In reality, we're going to end up with a combination of businesses invest less because we drive up the interest rate and raise the cost of investing. And then also more money is coming from abroad and we're running a larger trade deficit. So we'll have a combination of those two outcomes, neither of which is good.
And some people have recommended that we call the trade deficit an import surplus in order to make it sound a bit better. You talk about that a trade deficit isn't inherently bad, but what sort of like, how do you think we can frame this in a different light? And what are some of the long-term risks of running massive deficits?
Yeah, so Adam Smith wrote The Wealth of Nations nearly 250 years ago because he wanted to make the point that it's not like all trade surpluses are good and all trade deficits are bad. We're getting a lot of stuff. You could even say we're taking advantage of China and Germany and countries around the world because they're sending us really great things, all sorts of cars, electronics, intermediate capital inputs, stuff we need, to make our manufactured goods, and we're getting all of that. What are these countries getting from us? They're getting little green pieces of paper, most of which actually have a relatively low interest rate. So who's taking advantage of who? I could just as easily tell the story that, yeah, we're getting these things that we love to have, and they're working really hard to make them for us. And, they're just accumulating something that, who knows what it'll be worth in the future.
Yeah. You have so much expertise and experience with economic policy. And so as you're looking at, this conversation around fixing the twin deficits, what do you think a more responsible budget strategy would look like?
I mean, this one's really easy. You want some combination of taxing more or spending less. Then based on your values, you can decide which of those you want to do and how you want to do it. And, put me in a room with any, Republican policy wonk, and we'll walk out 15 minutes later with something that, might be a full solution, or if it wasn't, would at least be a lot better than what we have now. On the other hand, put a bunch of Republicans in Congress together all on their own, and they're going to walk out with a big tax cut. Put a bunch of Democrats in all on their own, they're probably also going to walk out the door with a deficit increase. That's what we saw in the previous administration. And, that's can't continue forever.
So you think one of the solutions would be to address the partisanship? Like ideally we get the both sidesism kind of stopping?
Yeah. Look, I think
Yeah.
Republicans have done more to add to the deficit than Democrats have, and especially to do it on a permanent basis. But at this point, there's a few politically easy options that either party could do on its own, but there's a lot of really politically hard ones. And one thing that we're just not even talking about anymore is the Social Security Trust Fund is exhausted a decade from now. And at that point, Social Security can't pay full benefits anymore. The closer we get to it, the worse the options are. I am positive that the Republicans could not on their own pass a law, and I'm positive that the Democrats on their own couldn't pass a law. The only way really to legislate this would be for the two parties to come together. But that political problem is much, much harder to solve than the algebra problem of Social Security or the deficit more broadly.
And it seems like the American public sometimes has a hard time stomaching what some might call like necessary pain or just sort of understanding the underpinnings of the economy. And understandably, because the economy can be quite confusing. So even if we reach this like magic point where both parties align and everything's perfect policy wise, like do you think the American public would be able to take on whatever's required for a more responsible budget strategy?
The issue in all of this is that it's very clear and transparent who's affected by the legislation, whose taxes goes up or spending goes down. But then all the people that benefit from the legislation are people in the future or people whose taxes, didn't have to go up as a result or benefits didn't have to go down as a result. And so the people who suffer know they suffered. Just as many, if not more people gain. They just don't have the same voice in the political system. And one of the jobs of economists is actually to give voice to the voiceless by showing the full set of consequences and the full drawing the line out, not just the first step, but the second, third, and fourth step is a way of speaking for all of those people who are, seriously affected by, inaction in this case.
Yeah, I like that. Voice for the voiceless. I think that's a good way to think about it. And I have two more questions for you. The first one being about this 90-day pause. So we have essentially 3 months to get this trade relationship more stable. What would you push for if you're writing this deal and negotiating with China and trying to get us out of the other side of this rather volatile moment in history?
Yeah, so some of the tariffs we have on China are for the stated purpose of combating the fentanyl emergency. That's not totally crazy. China could do a lot more to keep the precursors for fentanyl and fentanyl itself out of the United States. They've indicated some willingness to take steps there, and I hope the Trump administration does get the best deal it possibly can for the health and safety of Americans when it comes to just this horrible scourge of a drug. Beyond that, we have a philosophical choice to make. Are we trying to de-link from China? Or are we trying to reduce China's trade barriers, get China to buy more stuff, which paradoxically would actually link and entangle our economies even more than they are right now? I tend to think a greater set of links would actually benefit both of us, with the exception of certain targeted national security areas. But other people I respect have a different view on that question. And to some degree, I'd love the administration to lead a discussion that addresses that issue. Do they want China to buy more stuff and make us closer? Or do they want to each buy less of each other's stuff and move us further away?
And this will be my final question, and of course it's about the Federal Reserve. So is Jerome Powell now off the hook for cutting rates now that we have this stable couple of months, hopefully?
I hope so. I mean, he doesn't have any choice but to be data dependent. You'd like a central bank to be ahead of the curve. You'd like them to be forward looking. But right now there's two things that are curving in opposite directions. We still think there'll be more inflation. We still think there will be some slowdown in the economy. And if the Fed tries to get ahead of the curve and it's ahead of the wrong curve, that could be a really big problem. And so they have to be, just like any business when it faces uncertainty, it cuts back on its investment and does less while it collects more information. The Fed also needs to slow down, collect more information. Prior to all of this, I had expected the rate cut to be something more like September. And, if anything, this might say September or later. I think it'll be a relatively high bar to cut rates. You'd have to see a real substantial weakening in the economy. And it could take a while for that to happen, or maybe it won't even happen.
Yeah, hopefully it doesn't. Well, thank you so much, Jason. This has been amazingly helpful.
Thank you.